Good morning, guys. Welcome to this Friday, May 9th. And I had to say, this morning has been one busy morning. The whole internet was down. I got in front of my computer. Everything is red, down, not working. So I've been getting that thing back up again. And so a little bit rushed. I had to rebuild charts and mess around with stuff here. But that was a little bit of it's not quite what you want when the first thing you start in the morning. So overnight, I don't know exactly what this reaction was here. Some announcement, some headline came out. I haven't heard anything on the news about it, anything. The news all day today is just Fed speakers. We had one at 5:55, at 6:15, at 6:45. We're gonna get one at the 8:30, 10, 11:30. It's like Fed speakers all day. Unbelievable. So I mean, it's like not quite sure what they're doing there, but they are babbling away. So other than that, not much news to drive the market. So this reaction we have got right here, probably a headline of some sort. We'll see how if we can get some clarity on the regular business news here. Either way, though, overnight holding on pretty freaking good. Pretty freaking good. So yesterday, though, I had to say, because I had to leave, they missed that last update. So when I came back, everything was looking pretty good. We were up here hurting and trading towards the upper levels. And I was feeling pretty positive. We come back in and look at the computer, and they're right back down here again in the 5680. It's like, oh, great. Profit taken into the close, and that was it. But so far, the overnight held up pretty good, and we have been slowly grinding this higher. And I would just say this is just that wall of worries. It's you get a little bit higher and knock it down, a little bit higher, knock it down. It's not a straight shot, not a euphoric run to the upside by any means, but it is definitely grinding higher. So we are up in this upper range, trying to get up to this attractor at 57.50. So I thought they're going to get there yesterday, didn't quite make it up there. So I'm going to be looking for that today. Still starting off range bound with a bias to the upside. The reason I start off range bound with a bias to the upside is really that it's we are pretty much in this bigger range. Market seems to be want to trade higher, so we're going to favor the long side, but usually the day seems to be pretty range bound. It's not like it is straight top, bottom left, or bottom left, top right kind of a chart every day. It is up and down, and it charged pretty good. So there's plenty of range bound opportunities throughout the day session. So I'm going to be starting off looking to I would favor the long side, looking to buy weakness. At this point, there should be a little edge there. It's a little bit crowded, but I will stick it in there anyway. Yeah, that's the small one right there at the this area right there. Okay, so. Like so. So looking to buy weakness at this point against that 56.95s, 56.82, 56.75, 65 down to the 56.50s for rotations back up again. So they're trading below that 56.50, so I'm taking off any long bias and going back, but yes, flat out range bound at that point. So initially looking to buy weakness and for rotations back up. And on the short side, not going to be super aggressive, but still looking for shorts against the well, 57.05 would be pretty aggressive, but up here against that 57.15s, the mode here from yesterday at 25, and the 38 to 40s here on the upper edge. So and we're pretty close to that 50s. I haven't touched this upper edge yet. It could be an edge up here, it could be one up here at the 57.60s. This area is pretty wide, so it's either of those could be up there. But once we get up into above the 50s, I think we are at this attractor, and we can certainly see a little bounce off that. If they start trading up like they did yesterday, this little bounce could certainly be kind of fall off. Usually you get that bounce if you have a pretty good move into that high volume area. But if it slowly grinds closer and closer and closer, you're not going to be able to see a bounce like that. But the first time you run into a high volume area, look for a potential little bounce off it. So if we get a nice little run up here to the 50s, I would be looking for a little bounce. If this slowly grinding up here, and you can see it's not quite you can't quite say if it's getting there or not, or running up into that area with any conviction. I would just skip looking for that little bounce to the downside. But starting off range bound, looking to pretty much trade this as a market range. I would favor it alongside, given that we're up in this upper range, given that we haven't really fallen apart in any big way, and we have a trade deal behind us, got some stuff going on, and overall things are starting to move in the right direction. At least it seems like it. That doesn't mean that the market can't get knocked down pretty hard. It could easily happen. You know how it is. They trade it higher like 20, 30 points a day, and then they run it down 500 points or 500, 200 points. 200 points in like a half a day. So the elevator down, the grind higher, and then the elevator down. So if you get a piece of bad news somewhere, you can certainly see a pretty big sell-off. But it's at this point, I'm not quite seeing it. So unless there's something unforeseen happening. So I'm going to buy against that 56.82s. Well, 56.95 would be the aggressive buy. The 56.82s, the 75s, 65s, 50 to 55s here for rotations back up. And then on the short side, the short opportunities against 57.05s, the 15s, 25s up to that 30s, 38 to 40 level for rotations back down. So taking those short trades, I think is very much valid, even if you have a slight bias to the upside, because it's primarily range bound, and then you can be a little bit more aggressive on the short side when you run into these upper areas. So that's kind of how we get started on the ES. It is a Friday. We have a ton of Fed speakers, not really a bunch of news to drive the market. So I was going to be looking for late in the day profit taking or risk off kind of behaviors. If I start seeing that, then I would make a little bit more aggressive on the short side, but a little bit too early to say. So we'll take it from there, and when we get closer. Looking at the bonds and the Nasdaq. The bond market not moving a whole lot. A little bit to the downside, a little bit off that 114, so a little bit lower prices, a little bit high yields, and but they're still pretty much trading in this range around that 114, 15, 16. So as this keep going back and forth in this range, just stay range bound. If they start taking out that 130, 114 to 130, 30 to 114, which it looks like it is, I would probably put a slight bias to the downside to see how far they can take it, but still looking to buy support areas down to about 112.16. So we've got a little bit of range to go on the downside before we had to start worrying about the move out of the middle on the bonds. So look trade from the short side to get started. Look to sell the 113.30 to 114s right now, and the 114.09s for rotations back down. And if they trade up above that, or they trade up above the 114s and they don't quite move a whole lot, then I'll just take off the short bias. So that's the bonds. They're not moving a whole lot, but right now in the overnight, a little bit of bias to the downside on that one. Nasdaq is pretty much up, almost up to the highs again, but they had also this little knockdown effect late in the day yesterday, a little profit taking going on there. And it's just rough when that happens, you know. It is very tradable, by the way. So if you're looking for action in a slow day or when the market moves, the last 10, 15 minutes of the trading day, it is high risk trading for sure, a higher risk. But sometimes you get a big move like that, especially when the market's been grinding higher. And you get profit taking like that, or if the market has been trading lower, you get a little bargain hunting going, and then got a nice snapback, and those can be pretty violent, and they're very tradable, but it is volatile. You need to get good trade location, otherwise you can get shaken out of those trades pretty easily. So starting off, same range bound, slight bias to the upside on the Nasdaq. They are holding right at this level, the 2200s, and if they can hold above it, I would stay on the long side. and see if they can take it up to that 2500. That's your next attractor area and the resistance area to pay attention to. So early on, looking to buy weakness. At this point, aggressive would be at 190, 195, like the 140 to 50s against the 20,070s, 20s, and the 19,980s. So I would say they start trading down here below the session lows, the 20,070. Probably take off the long bias at that point. Still looking to buy against the 20s and the 980s for rotations back up. And if they trade below that 980, 19,980, I think bets are off at that point and we are heading lower. So that's the way I'm starting off on the NASDAQ. On the way up, since we are primarily range bound, looking for short setups against the 230s. Maybe this level, it could be a decent one at 270 and then the 320s here. So 230, 270, 330s for rotations back down. So that's kind of the approach on the NASDAQ. So favored alongside on both ES and NASDAQ, but traded primarily as range bound. So that's the way I'm looking at it right now. And then finally, oil and gold. So gold backed off pretty hard yesterday. Again, it seems like a rotation out of gold into equities would be the risk-on behavior. A lot of people buying gold for safety. If if all the uncertainty starts going away, the trade deal starts coming together, stuff like that. A rotation out of gold into equities at that point. So, but this has been so volatile. I've been avoiding trading gold. Sometimes you want to because it's moving. So it's moving directionally pretty hard, but it is still churning back and forth, and it's really easy to get caught in a shitty trade or get shaken out. So starting off at this point, looks to me like they're trying to retrace pretty good. So they're back up here above the session highs in the London session. So I'm going to be looking for a little bit of retracement back up here to that 3340s and look at the where's my capital flow here on gold? There it is. So capital flow, we're back up here to that 3340s. Looking for a potential test up here to the 3350s, but chances are, if they now retraced it right back here to value may be right here at the 3330 to 40s, and we may get stuck here. But I'm going to start off with a slight bias to the upside to see if they can push this higher. And if they can't, they're probably just going to stay range bound here on gold and see them just go sideways here in this high volume area. So that's gold for me. I mean, I'm thinking they were probing pretty good to the downside, this low volume area, and now they're back here to the attractor. So one fairly obvious one at the 3340s, one very obvious at the 3240s here on the way down, but $100 lower. So, and you can see this ledge right now, this TPO ledge. Not a lot of volume there, but definitely the TPOs has been down here bouncing off this level, 3270s a few times. So, and if they can't extend to the upside pretty quick on gold, I'm going to just stay range bound on that guy right now. So initially looking to buy against that 33s, 25s, 16s down to the 08s, rotations back up. And I would say below the 08s, take off the long bias, look for maybe moves to the downside instead. And on the way up, I'm going to be looking for short setups against the 40s, 46s up to that 55 level. And above 55, then I think they're breaking above it and breaking higher. So those first three resistance areas I'm going to be looking for short setups against. It's pretty freaking volatile gold. That's all over the place. So we have to be careful trading that guy. And oil, look at oil popping. It moved to the upside. They right now right back up to value. So okay, so we have a short-term little price increase. So this move here started yesterday, and now we're heading up towards this 62 level. And I mean, it's how should I say it? Not completely as surprising. You'll get the rotation to the upside, short-term changes in supply demand on oil, issues happening and so on and so forth. So it's not going to be a straight shot down, but any opportunity to trade up here, I would look for short setups against these upper levels. So I'm not looking for a rally in oil. That's going to be a geopolitical issue of some sort. You would hear about it if oil is going to be spiking for some reason. So I don't see that. So and this for me is short-term pops in prices, and it should be opportunities to get sold. So I would be looking for short setups against that 62, 62, 15, these upper areas of resistance for rotations back down again. Right, so that's looking at oil. Now, if there is a supply shock, not a supply shock, but if there is a supply issue or there's a geopolitical issue of some sort, yes, oil can start spiking again. So for sure, but I haven't heard anything about that at this point. And yeah, I mean, so far it seems like this Red Sea issue is sorted out, at least in the short term. So that should be a good sign for oil as well. So not sure why it's trading higher, but for me, it feels counterintuitive, and I would be looking for short opportunities against that. In the day session, traded from the long side, looking to buy weakness because you don't know quite what's driving it. But when you come up to resistance areas, definitely look for short setups. It's yes, there's no rush to hop on a short trade when it looks like that. You can try to trade with that market until you see a good resistance area form and the market run out of gas. So. But it's been pretty volatile, the kind of volatility going on here towards the after that's about 7:30 here this morning, Eastern time, that is. This little big pop here, we're not sure exactly what's going on with that. So I'm going to get back to the news after spending the morning trying to get my internet going. Great. But anyway, back to the ES, and let's see how this goes. It looks like it's settling in right now. There's a big reaction, and it's Friday. I'm going to be watching for that risk-off behavior towards the end, the latter part of the day. Early on in the trading day, I'm still range-bound, looking for favoring the long side of the market, right? So that's how I get started, and let's see how this whole thing shakes out. Alrighty, guys, good trading, and I will see you back at 11:30 for the next update. Later.